eEnergy news. I also think this was cracking. This is why this puts them in. So, we all know local authorities. If you didn't read the blogs, I do apologize if I'm repeating myself, but I mean, local authorities are strapped for cash, unbelievable amount of trouble they're in, many of them. But they have to start becoming, environmentally friendly. LED lights, all kinds of things like that, solar panels, they have to do that. So they can't afford it, So they can't just pay up front to replace all the light bulbs or put solar panels in or EV chargers in. This is where eEnergy comes into play. So they take the capital, sort of spend off book, and then they're paid energy as a service, recurring revenues. Very good, forward visibility. Now, what constrained them last time was they did have this huge, debt. Not wasn't huge, it was big debt. They didn't have any more headroom on that because, to sign up new customers, they had to have headroom to say, we'll take the capital expense on our book, you pay us back on a monthly basis. It's a win-win, really, because the local authorities don't spend anything up front. They get a new environmentally friendly building and they have no capital, expenditure. Meanwhile, eEnergy get recurring revenues. Now they've sold their energy division off, the 18 million in cash, net cash, that is. They got obviously more than that for 29 million. And they've signed this 40 million pound project funding deal with NatWest. They can literally sign as many local authorities up as they want. There's no worry about headroom. So I think this is very bullish. Like I said, with a strong balance sheet, and you've got an incentivized CEO who owns a nice bit of stock there, nice hot sector. I think it could do very well. I think I've got 2-3% of that in that. But I quite like that. What else is there? Anything else? Oh, Trufin. I don't know if you saw my blog. I'll just sort of buy one, sell one. This is a Trufin. Looking at the value of this now, and it's the chart, right? Like I said, oxygen was off. Oxygen is amazing business. I mean, it's steady. It's not going to have, blow the roof off top line revenue figures, but a lot of that converts, and they have a huge forward visibility. Oxygen. They had an offer they rejected for 26 million back in December 2022, not 23, 22. They were doing about a million of EBITDA then. They're now doing about 1.5, 2 million of EBITDA maybe this year. So you could argue that if they offered 26 million back then, and they're now doing 50% more EBITDA or 100% more EBITDA, that's worth more. Anyway, 26 million is half the market cap of Trufin. That's about PlayStack, which is now sort of EBITDA profitable, and Satago really coming into its own. That's the rock star that I think will blow the doors off. That is apparently forecast to be worth 101 million in 2025. So it doesn't make any sense. It's just the valuation, and we are now they have cash to get to profitability. So I do like this, and I think we may have seen the bottom of this trend. I got in wrong one last time. They're going here, I think. I didn't just held on, saying yes, love the story, love the story. I ignored the trend, range trend, downtrend. But now, I said this may have to come back down and retest and go back up. I've only put 1-2% in it. So I'm happy to just sit in there, but I think this is maybe the end of the downtrend, the bottom here. Hopefully, the results at 71 days.